Well, welcome to Bloomberg. Quint, Agam and I are here to wrap the markets for you, and today we are also being joined by Sharmila Joshi of sharmilajoshi.com. Nifty sees 8100 being breached, so the benchmark indices Sensex and Nifty dropped to their 5-month low. In fact, both the indices were under pressure throughout the session, but 8100 got taken away just in the last few minutes. So the last time that the Nifty breached that 8100 mark was only in June. That was at the time of the Brexit vote. But both these indices ended with a loss of about 2%, over 2% today. But 200-day DMA broken today. Sharmila, 8100 is broken on the Nifty. What are the important levels to watch next?
Honestly, I think that it doesn't really, it won't really serve any purpose to look at levels, because I think the kind of concerns that we are seeing in the market are really nothing to do with, any technical level that you could be talking of. It's going to be more a question of when people really feel the confidence to really come in, the long-term money sees the confidence to come in and start buying. And there are so many uncertainties at the present moment that it's really difficult to envisage at what level that could be. So to me, actually, as an investor, this is a great level to start buying at. But even I am holding back because simply the kind of cut that we saw in the last hour seems to suggest that there is more left. So there are so many things that we don't really know how to gauge at this point in time as to what this development this week with demonetization, what impact it's going to have on various sectors. It is very difficult to take a call, right at this point in time, especially when you have this time till 30th December. That's when we'll really start seeing the numbers, how much money is getting deposited, what's going to be the strategy of the government going ahead, etc. So I think only then the picture will become clear. Then you will get more feedback as to how the consumption items are getting hit, what is really happening. Like for instance, now you're just hearing stories, but those will get translated into numbers as we go ahead. So I think that's when you will be at a better level to really talk of levels or to take the market from there. So I think for now you really need to just have your list ready of stocks that you like from a fundamental basis, and really know that just as all things pass, this will too. And at some point in time, really step in and at least start buying in tranches. So that's what I would look to do, and probably in the next couple of days, I would start recommending my clients to buy.
Okay, now that brings me to the Bloomberg Quint poll of the day. The question was, with the Nifty 50 index below 8200, is it a good time to buy? 42% of the participants said yes, and 58% actually said that they would wait for some more correction before they start buying. So probably some more fall that the market participants are seeing before the index bottoms out. But if I even just give a quick roundup of how the currency and the money market have done, well, the Indian rupee saw the biggest weekly fall. So the rupees has slipped about 50 paise versus the US dollar to 67.6. So this is the biggest weekly fall since again the Brexit vote in June. So we are back to June whether we're talking about the equity markets or the currency markets. So when you talk about the 10-year bond yield, the bond yields were trading 15 basis points lower at 6.57%, and that brings me to the futures and options markets. Agam, how severe has been the FI selling?
Well, as one might expect, it has been quite severe. We're looking at a breach in 8100. Of course, we ended up above the mark, but with respect to the benchmarks, that is your Nifty index as well as your futures Bank Nifty, we've seen about a double-digit increase towards their November futures open interest. Of course, these numbers are provisional. We'll have to wait for the Bhau copy to come in. But for now, there is substantial selling with respect to both the Nifty Bank as well as the Nifty futures. Let's take a look at what's happened in the options market. We've seen an increase and a lot of writing in the 8300 call and the 8400 call, as expected, given the fact that we are now looking at the Nifty breaching 8100. With respect to open interest, while the 9000 call, which isn't appearing here, has a lot of distribution, we are looking at substantial writing in the 8500 call as apparent in today's day of trade as well. On the lower end, as you can see, from 8200, that mark is shifted to the 8000 put with the one with the maximum open interest. So for now, there are plenty of concerns out there. Sharmila, that actually also brings me to my next question. I mentioned that the Nifty Bank has also started seeing more selling, but we're also looking at a spurt in the PSU banks. how would you play the banking sector right now?
So it's so strange that the one sector that you would have avoided last week is the sector that you want to buy into this
Right.
week, and just goes to show. But yes, I think all this money coming into banks, especially PSU banks, is great. But you have to remember that really speaking, the results didn't give you an encouraging picture at all.
Yes.
In terms of where NPAs are, where the recovery is, etc., etc. Also, at this point in time, you're assuming that this money that the bank is getting in, whether it's going to stay is going to stay with them, and it will go towards infrastructure or improving the balance sheets or
Right.
whatever. But you really don't know at this point in time whether all that money gets withdrawn,
Right.
coming into the next couple of months. How much of it really just stays with the banks, and really what is the use of that money? What use the banks are going to put that money to? So I think just looking at their current balance sheets is great that you've seen this run up. But I think there will come a point where you will see some selling coming into that space as well, because
Right.
because I think you haven't seen, because the corporate side of the book has always been the problem. It's never been the retail side, and all this money is really retail money. As whatever you can gather, it's individuals depositing their money.
Right.
So it doesn't really take away the bank's problems. So to that extent, I'll be circumspect, but definitely I think things look a lot better for PSU banks because of this event than they did last week, and I think therefore some of that run up is justified.
Okay, but in the banking space, are there ideas that you're working with right now that maybe this bank would come at this level and you would be interested in looking at it?
So I think the two obvious names are for me SBI as well as I think Punjab National Bank,
Okay.
for different reasons. I think SBI, even in terms of numbers, 2-3 quarters down earlier, you did see that sort of improvement coming in. They are the largest bank.
Right.
So I think even from this move, you will probably see them emerge as the biggest beneficiary. So I think SBI comes to mind. I think if it were to come down back to 260, 250, 260 level,
Right.
I think it will look great. PNB, I think it's double. First, they will benefit from this, and I think even in terms of really chasing the bad loans, that picture did emerge quite well for them this
Right.
quarter. So I think from that aspect, that's a number that looked reasonable even in the PSUs, and it's a large PSU.
Right.
So I think even from that point of view, that number looked good. But the run up there has been even more. I think it's more like 60-70%
Yeah.
from the lows. So I think you will have to wait to see a little bit of a correction there.
Right. Right.
So if we talk about some of the other Nifty movers, the stocks which really fell the most since the close of markets on 8th November, after which you had that demonetization announcement. Well, Nifty has lost about 5%, but amongst the losers, what stands out really is auto stocks. So you have Eicher Motors, Tata Motors, Maruti, Hero Moto, Corp, cement names like Ultratech Cement, Ambuja Cement, and even quality names like Asian Paints and HDFC Limited, which have figured amongst the top losers. But coming back to you, Sharmila, Tata Motors, Asian Paints, Ambuja Cement, some of the biggest losers over the last 1 week. Any of these three names that really look attractive to you at the current levels, or again you would rather wait and be cautious?
I think wait, because a lot of these names had already run up to really very high valuations. Whether perhaps not cement, but I think with cement it's more a question of the fact that the numbers weren't really particularly good. And I think the reason for that lies in the monsoons, because after 3 years we had a great monsoon, so you could see that effect being played out in most of the majors. But that said, I think a lot of people, one of the biggest concerns in the market for today, for instance, was the fact that a lot of brokerage houses were cutting their growth prospects for India. So when you see that happening, the direct sector that's going to lose from that is going to be cement. So what recovery you would have expected to start this quarter simply means that it's going to be delayed at least by a couple of more quarters, given the fact that if you were to really see any kind of slowdown come because of this demonetization. Coming to autos, I think for Tata Motors there's a double whammy, because first of all they were already sort of weighed down by this whole boardroom battle that's playing out. Numbers I think look reasonable. I don't think anybody really has a doubt on any in their mind regarding JLR or that bit. But I think this will take its toll, and I think that perhaps more importantly, that in the auto space, if you see a recovery coming, it would probably be in the passenger vehicle, and probably Maruti will be the stock that you will sort of buy first before you buy anything in the commercial vehicle space, or like an Eicher Motor, however good the numbers may have been. Those are the kind of items that you would think would see a bigger slowdown than you would see maybe in a passenger vehicle car that costs 5-6 lakhs, because hopefully that was not that's not the aspirational car that was seeing that spend. So I think from that aspect, I would just rather wait at this moment. Though I think in Tata Motors the correction today has been significant. I think some 10% or something at one point in time.
Yeah.
Okay, so you also highlighted Eicher Motors as one of the stocks, and I would just like to tell our viewers that Credit Suisse has downgraded the stock by 2 notches to underperform, and they've cut their target price from 25,000 to 18,300. So that's a steep cut in the target price that they have really taken. But Sharmila, Eicher used to be the darling of the markets once, and just in a month it has fallen from levels of about 26,000 to 20,000. So again, even when it comes to Eicher, do you really think it's a case of attractive valuations, or would you rather feel that there's a break on the growth story now?
Very honestly, I don't know what percentage of their sales came in cash. I think if you had
it's about 40%.
Yeah, then I think if you look at that, then I think the kind of fall that we are seeing seems a little exacerbated. So hopefully the recovery will come. But at the same time, if you are going to see markets correct as a whole, there's no reason why Eicher will outperform. You can't make a case for that. So I think then in that sense, you need to allow it to correct a little more before you start buying. But definitely, I think given the kind of numbers they've had, also the product that they have, I would be fairly confident. I think it would be one of the stocks that you should look at very seriously if this market fall continues.
Alright, so even as the Nifty has lost about 5% for the week, sharper or the deeper cut has been seen as far as the mid caps and the small caps are concerned. So the Nifty mid cap index has lost about 7% and the small cap index 8%. Agam, anything that really stands out?
Well, once again, you guys have already spoken about, the gains that we've seen in the PSU banks. And once again, with respect to the broader markets, that's what you're looking at. So we have corporate bank, we have, of course, Bank of Baroda is not a small cap bank, but we have the likes of Union Bank, along with, some of these SBI, your relatively smaller SBI counters, which are doing well in today's year of trade. But you have, other than that, you have gains in Merck, Natco Pharma, Suzlon Energy, Gujarat Fluoro, as well as Dish TV India. Dish TV India is, of course, reacting to the mergers news. So we've seen come back to 90 rupees a mark. Among the weaker counters, it will be NBFCs, and a lot of them. We have Canfin Homes, GM Financial, Manappuram Finance, of course, is a gold finance company. Along with that, a lot of jewelry, manufacturers and jewelry associated stocks. So we have PC Jeweler also taking a knock of around 13%. At one point in time, it was down by as much as nearly 20% in today's year of trade. We have weakness in Shriram City, Phoenix Mills, Gen Irrigation, Max Financial, along with Arvind and Jet Airways. So as you can see, a lot of these stocks are losing well over 10% in today's year of trade. So the carnage in the broader markets has been quite widespread. And that once again will bring me to my first question, and that has to do with NBFCs. Of course, NBFCs will have to bear the brunt once again because, and to a lot of extent, this will also be with microfinance companies because this is where the bulk of your masses are impacted. Do you have any call on NBFCs right now?
So again, I think in terms of valuations, they had run up very high, but I think with good reason. Simply because the stress that you saw in PSU banks, you didn't see in any of these companies.
Right.
So it seemed to suggest that the retail part of the loan, borrowers were better in returning money because there you didn't have any NPAs.
Right.
So they've given them a break, I think, of a couple of weeks. If I remember correctly, a lot of companies have said that we won't go and collect money because everybody's cash strapped just now. So I think they've given them that break, but I think it'll take that time for that cycle to come back.
Right.
So it's definitely a wash, I think, as far as the next month or so goes.
Right.
So it just brings me back to that uncertainty point. It is just that because of the uncertainty, you don't know how long this bad period is going to last.
Right.
And once you get cash, how soon the cycle comes back.
Right.
But there is no doubt in my mind that that is the space to be in. And I would really use this opportunity to start buying into some of these stocks again. Again, I think you have to bear in mind that a stock like a Manappuram has had a run up from 30 to all the way to 108.
Yes.
So you have to be careful, but that definitely is a stock that I like.
Okay, so in the broader markets, give us 3 or 4 ideas that you're keeping an eye on, and you know that these are the stocks that you're going to hone in as soon as those prices come.
3 or 4 stocks is difficult given the kind of correction that we've had. I think
Yeah.
you'll have any number of stocks, but I think definitely stocks from the NBFC space.
Right.
So you should take your pick from the stocks that you've been tracking or whatever. As I said, I like Amannapuram. I've recommended an Equitas. I think
Okay.
chemical companies is another space that I've begun to look at fairly seriously. So there again, I think number of companies have reported fairly decent numbers. So companies like an SH Kelkar or an Omkar Specialty.
Right, right.
These were some of the mid-cap ideas that. And then I think if you see a significant correction as we are seeing, on the auto space and auto ancillary space, I think some numbers could come up there also.
Right.
But there you'll have to be, like I've always recommended, for instance, Tata Motor DVR, which has
Right.
taken a big beating because of this whole issue.
Right.
So you need to keep an eye out on that news and then look at that. And then again, I think a whole host of mid-caps where results have been good. So unfortunately, a lot of people were banking on Q3, to be like sort of give you an indication of how the market was going to be going forward, how the recovery was progressing, etc.
Right.
But I think Q3 is a wash now,
Right, yeah.
unfortunately.
Yes.
So which means you'll have to stick your neck out and see which were the companies that did well in this quarter and start buying in those.
Right.
Okay. We have a viewer question. Mohammed Rafiq asked if these are new signs of an economic recession. Everybody or the market experts that we really spoke to believe that consumption, yes, will be impacted, and that will impact growth and GDP numbers in the short term. Of course, longer term trends remain pretty intact as far as the Indian economy is concerned, but we just don't know how long that would really take to go back to those normalized levels as far as growth numbers are concerned. 2 quarters, 3 quarters, we don't know, but everybody says it's a short-term impact that we are likely to see here. Shamila, anything that you want to add?
Well, there's a very interesting cartoon that shows the number of economists in India at the start of November and how it's suddenly gone
Right,
up
right.
with this.
Yeah.
So everybody's an economist.
Right.
But I think recession is like a harsh word because very honestly, none of us are experiencing that. But yes, there's no denying that the parallel economy, we don't know the size of it.
Right.
We all knew that it existed, but we didn't know the size. So to that extent, it's very difficult for us to gauge the impact of that flow drying up for a certain section of people and what it means to a lot of the. Just prior to this, we said 6-pay commission, good monsoon, so start buying, anything that is consumption.
Right.
Now you're saying that's going to hold back. So, I think precisely you need to just give it time. So, anything that you thought was going to happen over the next 3 months is not going to happen. You'll have to give it that much more time. But I think recession is a very strong word. I
Very
think
strong word.
that doesn't seem like a
Yes.
possibility, at least at this point in time.
All right, so at least that's some good news. So that's as far as your markets for today were concerned. What are we keeping an eye out for? Where in terms of domestic cues, you have a all-party meeting later today. Remember, the winter session of the Parliament starts tomorrow. So you will have those demonetization issue being brought up, and probably, I don't know if that could really lead to some sort of disruption in the functioning of the Parliament. And of course, we also need to see what develops as far as the GST rate
GST
structure is concerned. So these are some of the things that we are going to be keeping a track of. But thank you guys for watching Bloomberg Quint. I also want to thank Sharmila. I believe we have one more
Yes,
question.
actually, why don't we address this? So we have a question from Santosh Kumar, and he is saying, when can we expect the FIIs to return to our own markets? Sharmila?
Well, I think that from the FI perspective, you have to also look at what's happening in the US. And, if the kind of talk that we've heard from the new president is anything to go by,
Right.
he's talking of infrastructure spend. Suddenly there was a commentary overnight that he would actually go ahead and hike interest rates. So I think that would mean that sell-off from FIs would be a little more prolonged. So my guess is that at least till end of December, you're not likely to see any big return. It'll only be in the new year when fresh allocations are done.
Right.
And you take a fresh look at what's happening in where the levels are, what's happening in the emerging market. But I think the only silver lining that I would say is that within that space, India stands tall.
Right.
So it will attract its fair share of investment once this sort of phase passes.
Right.
All right, so we hope that answers your question. And of course, having said that, the odds for the Fed hike in December have only increased from 84% last week to 92% this week. So as Sharmila mentioned, December, the FOMC meeting will really be the key determinant in terms of how emerging markets will do in the near term. But I hope that answers your question. Thank you so much for watching Bloomberg Quint, and we will see you back again at the same time tomorrow.